Good morning and welcome to the Killik and Co market update. The big news today is that the energy price cap in the UK has been raised to £3,549. The cap sets the maximum amount that suppliers are allowed to charge per unit of electricity. So any households that use more than the average amount of electricity will end up paying more than that new cap. The cap has had to go up because the price of power has gone up by so much. Here's the UK natural gas price over the last 5 years, and that pink dotted line shows where the price was 5 years ago. And you can see at points during 2020, for example, the price did drop below that pink line, and that's because lots of factories were closed during lockdown and they weren't demanding quite so much power. However, more recently, you can see the huge extent to which the price has gone up because of that war in Ukraine. Gas is also used to generate electricity here in the UK, so when the gas price goes up, that tends to mean the electricity price goes up as well. This chart here shows where our electricity was generated from since the year 1998. You can see by the blue bar on this chart here that about 25% of our electricity comes from gas. Looking at the green, you can see we've had quite a big increase in the amount coming from wind over the past few years. And looking at the grey bar at the bottom, you can see we've had a big decrease in the amount coming from coal. Looking at the pink, you can see we are still quite reliant on nuclear power, which actually technically does count as a clean fuel. And interestingly, this week, both Germany and Japan have announced they are starting to consider increasing their dependence on nuclear power. With any big change in prices, there will be winners and there will be losers, and this big change in energy prices is no exception. Before looking at who these winners and losers could be, it's helpful to remind ourselves exactly how energy markets work here in the UK. Broadly speaking, there are 4 different market participants. We've got the generators who are generating the power. We've got transmission companies who are moving the power across the country using the grid. We've then got the distribution companies who are moving the power from the grid to individual homes and businesses. And generally, the transmission companies and the distribution companies will earn a fixed fee for that work. And then finally, we've got the suppliers who are buying power from the generators and selling it on to individual homes and businesses. At the moment, with power prices being so high, the generators are making abnormal profits, whereas individuals and businesses are losing out. Here we've got a chart showing the share price of Shell, formerly known as Royal Dutch Shell. It's a big oil company, but it's also very involved in gas. Gas accounts for over a third of the company's earnings. And you can see over the last few months, the share price has come up a lot because the price of gas has come up so much. What we're trying to do at the moment is have a think about what types of companies could benefit from individuals and businesses changing how they operate in order to try and use less power. So one potential option is that the amount of freight transported by road could be converted to being transported by rail, because that would use slightly less power. So please do give us a call if you would like to talk about this potential trend in a bit more detail. And finally this week, it's worth touching on currency markets briefly. The euro has just fallen to parity with the dollar. Last year, €1 would buy over $1.20, and today it will buy you less than $1. Energy prices are a big part of the reason for this move. Europe is a big importer of energy, and therefore it's having to pay these high prices for energy, whereas the US generates a lot of its own power, and therefore it's a bit more insulated against these higher power prices. So concern about this has caused quite a weakening in the euro. If you're holding any euro-denominated stocks in your portfolio and they're showing a loss, some of that loss could be due to the euro weakening rather than a move in the share price. Looking ahead, this afternoon we've got a presentation from Jay Powell, the chairman of the Federal Reserve, at the Jackson Hole Symposium. So that could potentially give us some clues as to the future direction of US interest rates. In terms of individual companies reporting next week, it's actually looking very quiet on the calendar, and we haven't got reports due out from any companies on the Killik & Co covered list. So that just leaves me to wish you a very happy bank holiday weekend, and we'll see you next Friday.